I'm about to tell you something that's going to sound extreme, something that most people in crypto will disagree with, something that might make you uncomfortable. But I need you to listen very carefully, because what I'm about to share could be the difference between life-changing wealth and devastating losses. This year, I will sell everything, every single position, every Bitcoin, every altcoin, every token in my portfolio. And I'm not saying this lightly. I'm not being dramatic. I'm not trying to get your attention with clickbait. I'm 100% serious. And by the end of this video, you're going to understand exactly why I'm making this decision and why you should be paying very close attention to the same signals I'm watching. Why am I planning to exit completely? Because the crypto market top will occur in Q4 2026. Fourth quarter, October, November, December. That's when the euphoria will peak. That's when retail investors will flood in thinking they're early. That's when the smart money will be quietly exiting while everyone else is celebrating. And that's when I will have already sold everything and locked in my profits. Now, I know what you're thinking. How can anyone predict a market top with that level of confidence? How can anyone know when the cycle will peak? And that's a fair question, because most people can't. Most people are guessing. Most people are following their emotions or listening to influencers who have no track record, no methodology, no data-driven approach. But I'm not most people. I called the top of the last cycle at $69,000. When Bitcoin hit that level, when everyone was screaming that it was going to $100,000 to $200,000 to $1 million per coin, I said it was the top. I said the cycle was ending. I said it was time to sell. And I was right. Bitcoin topped at $69,000 and then collapsed over 75%. Everyone who ignored that call, everyone who held through the peak believing the hype, they watched their portfolios get destroyed. And I will do it once again. I will call this top, just like I called the last one. Not because I have a crystal ball, not because I'm lucky, but because I follow the data. I follow proven metrics that have worked cycle after cycle. I follow signals that don't lie, that don't get caught up in emotions, that simply tell you what the market is actually doing beneath all the noise. So how do I know that Q4 2026 will be the top? How can I make such a bold prediction with such confidence? Let me walk you through the exact metrics I'm watching, the exact indicators that will signal when this cycle has peaked and it's time to exit. These aren't random indicators I made up. These aren't theories or guesses. These are proven, battle-tested metrics that have accurately identified market tops in every previous Bitcoin cycle. First, the Bitcoin Profitability Index. This metric measures the average profit level across all Bitcoin holders. And here's what history shows us. This index tops at around 300% every single cycle. 300%, not 200, not 400. It consistently peaks right around that 300% mark at the top of every bull market. When the average Bitcoin holder is sitting on 300% profits, that's when the euphoria is maximum. That's when everyone feels like a genius. That's when people start quitting their jobs and buying Lamborghinis. And that's exactly when the smart money is selling to them. Why does this work? Because it captures the psychology of the market. When profits get that extreme, when everyone is making that much money, greed takes over completely. Fear disappears. Caution disappears. Risk management disappears. Everyone wants more. Everyone believes it will keep going forever. And that collective delusion is what creates the top. So when I see the Bitcoin Profitability Index approaching 300%, I know we're getting close. And when it hits that level, I know it's time to start executing my exit strategy. Second, the MVRV Ratio, market value to realized value. This compares Bitcoin's market cap to its realized cap, which is essentially what all Bitcoin holders paid for their coins on average. When the MVRV ratio peaks above 3.0, it signals overvaluation. It means that the market is paying 3 times more than what the average holder paid for their Bitcoin. That's not sustainable. That's not normal. That only happens at cycle tops, when euphoria has completely disconnected price from fundamental value. Every major Bitcoin cycle top has seen the MVRV ratio spike above 3.0. In 2013, it peaked above 6.0 before the crash. In 2017, it peaked around 4.5 before the crash. In 2021, it peaked around 3.7 before the crash. The pattern is consistent. The signal is reliable. When MVRV goes above 3.0 and stays there, especially when it starts climbing rapidly toward 4.0 or higher, that's your warning. That's the market telling you that prices have detached from reality and a correction is inevitable. Third, exchange inflows. This is one of the most powerful real-time indicators of what the whales are doing, the big holders, the smart money, the people who actually move markets. When you see massive amounts of Bitcoin suddenly being moved to exchanges, that's not random. People don't move Bitcoin to exchanges to hold it. They move it to exchanges to sell it. And when the whales start moving significant amounts of Bitcoin to exchanges, when you see those large transactions hitting Coinbase and Binance and Kraken, that's them getting ready to exit. That's them positioning to dump their holdings on retail investors who are FOMOing in at the top. This metric is beautiful because it's not subjective. It's not interpretation. It's actual on-chain data showing you exactly what the big players are doing. And at every cycle top, without exception, we've seen a massive surge in exchange inflows right before the crash. The whales always telegraph their moves if you know where to look. They move their Bitcoin to exchanges days or weeks before they actually sell. And that gives you time to follow them, to exit before the selling pressure hits, to get out while liquidity is still there. Fourth, dormant wallet activity. This tracks Bitcoin that hasn't moved in years suddenly becoming active. Long-term holders, people who bought Bitcoin at much lower prices and held through multiple cycles. These are the strongest hands in crypto. They don't panic sell. They don't trade actively. They accumulate and they wait. But when they start moving their Bitcoin, when wallets that have been dormant for 3 years, 4 years, 5 years suddenly become active, that tells you something critical. It tells you that even the most convicted holders believe the top is near. It tells you that the risk-reward has shifted. It tells you that it's time to take profits. We saw this in 2017. Dormant wallets from 2013 started coming alive and selling. We saw this in 2021. Dormant wallets from 2017 started coming alive and selling. And we will see it again in 2026. When those long-term holder wallets start moving in significant numbers, when that dormant Bitcoin starts flowing toward exchanges, that's one of the final warnings before the top. Because if the people who understand Bitcoin best, who have held the longest, who have the most conviction, if they're selling, why would you be buying? Fifth, retail FOMO and the masses flooding in. This is the psychological indicator. This is when your barber is telling you about crypto, when your mom is asking how to buy Bitcoin, when taxi drivers are talking about altcoins, when mainstream media can't stop covering crypto and every headline is about new all-time highs. That's peak euphoria. That's maximum delusion. That's when the least informed, most emotional participants are entering the market, and they always enter at the worst possible time. Retail FOMO at the peak is like clockwork. It happened in every bubble in history, not just crypto. Tulips, stocks in the 1920s, .com, housing, it's always the same. The masses arrive last. They arrive when the easy money has been made. They arrive when the risk is highest and the reward is lowest. And they provide the exit liquidity for the smart money. So when you see crypto suddenly everywhere, when it's the topic at every dinner party, when people who never cared about Bitcoin are suddenly experts, that's not bullish. That's the biggest warning sign of all. Sixth, Bitcoin dominance dropping sharply to 45% with altcoins exploding. This is what's called the final rotation. Throughout most of the bull market, Bitcoin leads. Bitcoin makes new highs first. Bitcoin captures most of the capital inflows. And Bitcoin dominance either rises or stays relatively stable. But at the very end, right before the top, something changes. Money rotates aggressively from Bitcoin into altcoins. Traders who already made money on Bitcoin get greedy. They see altcoins haven't moved as much. They think they can make even bigger gains. They pile into Ethereum, into layer ones, into DeFi tokens, into absolute garbage coins with no fundamentals. And for a brief period, it works. Altcoins go absolutely parabolic. They do 10x, 20x, 50x in a matter of weeks. Bitcoin dominance crashes from 55 or 60% down to 45% or lower. Everyone thinks this is alt season. Everyone thinks this is where you make the real money. But here's what they don't realize. This is the blow off top. This is the final euphoric phase before everything collapses. Because that rotation isn't driven by fundamentals or sustainable demand. It's driven by pure greed and speculation. And when the selling starts, those altcoins collapse harder and faster than anything else. So when I see Bitcoin dominance falling sharply, when I see altcoins suddenly exploding with no rational reason, when I see ridiculous coins pumping 500% in days, that's not opportunity, that's danger. That's the signal that we're in the final phase of the cycle and the exit door is about to close. Seventh, NUPL, net unrealized profit and loss. This metric tracks the overall profit or loss of all Bitcoin holders and categorizes it into different zones: fear, hope, optimism, euphoria. And at every cycle top, NUPL peaks in the euphoria zone. That's when the market is at maximum greed, when everyone is making money, when unrealized profits are at extremes, when people feel invincible, and that's exactly when the market reverses. NUPL in the euphoria zone is like a flashing red light. It's the market telling you that sentiment has reached unsustainable levels, that the rubber band has been stretched too far, that mean reversion is coming. And when NUPL peaks and starts to decline from the euphoria zone, that's often the exact moment the market tops, not days later, not weeks later, right at that peak. So watching NUPL closely as we approach potential top territory is critical. When it enters euphoria, you prepare to exit. When it peaks and turns, you execute. Eighth, SOPR, Spent Output Profit Ratio. This measures the profit ratio of coins being moved on-chain. Are people selling at a profit or a loss? And more importantly, how extreme are those profits? At cycle tops, SOPR hits extremes. People are taking massive profits. The ratio spikes because coins that were bought at much lower prices are being sold at huge gains. This creates selling pressure, and when that selling pressure reaches critical mass, when SOPR shows that profit-taking is happening aggressively across the entire market, that's your signal that the top is either here or very close. The SOPR doesn't lie. It's pure data. It's actual on-chain behavior. And when it spikes to extreme levels, historically, the market has topped shortly after. So combining SOPR with all the other metrics gives you a complete picture. You're not relying on one indicator. You're looking at a confluence of signals all pointing in the same direction. And when they all align, when every metric is flashing warning signs simultaneously, that's when you know with high confidence that the cycle is ending. This is not guesswork. This is not me pulling predictions out of thin air. This is not luck. This is following data. This is following proven strategies that have worked in every previous cycle. This is approaching the market systematically, unemotionally, and intelligently. While everyone else is letting fear and greed dictate their decisions, I'm letting data dictate mine. While everyone else is listening to moon boys on Twitter promising $1 million Bitcoin, I'm watching the actual metrics that matter. And let me be very clear about something. Don't fall for the moon boys. Don't fall for the influencers with no track record who promise you that this time is different, that Bitcoin is going to 10 million, that we're never having another bear market, that you should just hold forever and never sell. Those people are either delusional or they're lying to you to keep you holding so they can exit on your liquidity. They don't care about your financial outcome. They care about engagement. They care about growing their following. They care about looking right in the moment, even if it destroys your portfolio. I don't care if people hate me for calling a top. I don't care if people laugh at me for selling when everyone else is buying. I don't care if I'm temporarily wrong and the market keeps going up for a few more weeks after I exit. I care about one thing: protecting capital and locking in profits. I care about being able to sleep at night knowing I executed my strategy. I care about not giving back 80% of my gains like the majority of crypto investors do every single cycle. Because here's what always happens. People make incredible gains on the way up. They see their portfolios 10x, 20x, 50x. They feel like geniuses. They think they've figured it out, and then they don't sell. They get greedy. They believe it'll keep going. They listen to the moon boys, and they ride it all the way back down. They watch 90% of their profits evaporate. They go from life-changing wealth back to almost nothing, and then they're stuck waiting 3 years for the next cycle, hoping to get another chance. I refuse to let that happen again. We will still win, like we always do, because we follow the plan, because we respect the data, because we're willing to sell when everyone else is buying, because we understand that the goal isn't to call the exact top. The goal is to exit somewhere near the top with the vast majority of gains intact, and that's exactly what following these metrics allows you to do. Many people will regret not following me, just like they regretted not following me when I called the last top at 69,000. Just like they regretted holding when I said to sell, just like they watched their portfolios collapse while I preserved my capital and waited for the next opportunity. History repeats. Human psychology doesn't change. The patterns remain consistent, and the people who ignore the patterns are doomed to repeat the same mistakes. So I'm telling you right now, in advance, with complete transparency, I will be selling everything in Q4 2026. I will be watching these metrics closely throughout this year. And when they start aligning, when the signals start flashing, when the data confirms what the cycle structure suggests, I will execute. I will exit my position systematically and completely, and I will be sharing that process publicly so that anyone who's paying attention has the opportunity to do the same. You have a choice to make. You can follow the crowd, hold forever, believe the hype, and risk giving back everything you've gained. Or you can follow the data, respect the cycles, execute with discipline, and actually keep your profits. The choice is yours. But don't say you weren't warned.